Hello and welcome to Trading with Technical Indicators. My name is James Boyd. Today's date, August 25th. We got Ben Watson in the chat. We welcome him and we welcome all of you on this Monday, start of the week. So you want to make it a strong one. We got with us Lori, Life in the Fast Lane, Dom, Greg, Amanda, and many others. Welcome to all. We got some questions that have been asked in the chat, so we want to jump to those as soon as possible. I wrote down two main ones, and we want to just hop right in. Hopefully you had a good weekend. I spent a lot of time with family. My son started college today. My daughter, she starts tomorrow. And I start my vacation on Wednesday. It's so funny, but so true. Anyway, a little fun there, and I know she can hear me, right? All right, so just real quick, as we get started, you can find Ben or myself on X. There's my handle. Ben will post his handle in the chat here. Also, a quick reminder that the information here is provided for general informational purposes only. Also, when we talk about options, options carry a high level of risk and are not suitable for all investors. When we talk about examples, we will do them in the paper money. That's the software application. And we'll do that for educational purposes only. It's a great way to learn and test things, right? And so also remember that investing involves risk, including loss of principal. Now, also today, our focus, what I want to really talk about is, I want to talk about reading indicators, okay? Second, I want to talk about understanding the indicator. And then I want to talk about really how to use it. Now, the truth is, most technicians, they don't just use one indicator. They might use a couple of them together. We actually use those right on the Market Watch page that we've actually always talked about. But I want to talk about that a little bit further here today. And then also I want to kind of talk about some of the indicators we talk about in the charts as well, but I'm going to focus on the Market Watch, okay? So first off, let's go ahead and just take a quick look. So many of you actually know that you could go to my X page at James Boyd CS, and you'll actually see the scripts listed at the top, okay? Now, first off, what I want to do is I want to look just at real quick indexes, okay? Let's take a quick inventory of where kind of the indexes were from last week to this week. And then we'll kind of talk about some of the questions that came from that. So when we look at the Russell for the week was at 2.82%, okay? Now, the reason why we actually use the week percent is that's probably going to tell us which one could be bull flagging, meaning there's whatever, and this is a list of indexes, okay, for the most part. Whatever one goes up the most, that is the one in the process of making the bull flag pull, okay? If it's something, let's say, that is maybe pulling back or down at the bottom, you would actually be thinking maybe it's a flagging, okay? We'd have to verify, is that the case? Did it have a recent high? But the moral of the story is, whatever went up the most, it could be making a shorter term higher high, they'll pull, and whatever is actually pulling back, okay, maybe in the last week or so, in this case, it could be flagging, especially if it made a recent high. So that's why we care about the 1 week. That 1 month, we're talking about trend. So whatever actually has the highest 1 month return, we're talking about 21 days there. The biggest thing is that's giving us an idea of which ones have trend, higher highs and higher lows. Now, I want to kind of point this out. What has been kind of shocking a little bit, last week we could talk about, could the Dow and the Russell could be taking some leadership? We know the S&P and the Nasdaq was very hot. It had been, and actually they kind of started to fall down a little bit, which we're going to talk about. And we kind of saw investors maybe move to some of those areas like the Dow and the Russell. Now, when you look at the Russell here, you're going to see that when we look at the relative strength, which is very important, it's looking at the price performance compared to the S&P 500, okay? So if we take a look at that price performance compared to the S&P 500, it's in that green color there, okay? Now, if you take a quick look at this, what you're now going to notice is that's been in the last 63 days. So we're talking about 3 months, right? Every 1 month, 21 days, 2 months, okay, 42 days. RS21, 1 month. This is 2 weeks, 10 days, and that's 1 week. It doesn't matter what time frame we look at. The Russell has been stronger than the S&P. Now, some people say, great, I'm not going to buy individual stocks. Some people say, I'm just going to buy that basket of stocks. Connie will talk about that on this afternoon at 4 p.m. Eastern. Kevin and I also talked about that on Friday morning at 9:30. okay? Those classes are not recorded, but that's why some investors have been targeting that Russell. Now, the biggest thing is when you look at the Dow has not been the weak brother or sister. They've actually done pretty strong as well. The one I want us to kind of keep an eye on is gold. Over the last 2 weeks, last 5 days, last 2 weeks, you're seeing in this case, they've been strong, right? And if you now look at this, you're now going to see that over the last, if we go back 21 days, 2 months, 3 months, it was in the red. Now, a lot of people might say here, remember our goal is to talk about indicators. How do we read them and get an understanding, and how do we use them? What would I take away from this? Well, if we talk about technical analysis, you didn't talk about the Russell, they don't understand the indicators. The indicators are actually showing on multiple durations of time strength in the Russell. That's number one. Number two, that movement also came into the Dow Jones. If we didn't say that, we don't understand how to read it. Third, we'd also have to make a comment that gold, and we talk about prices of gold or gold stocks. We said gold stocks was actually leading, okay? And why does this even matter? Well, because we're trying to ride trends, right? I don't care if it's trying to just get in for 2 to 3 days, 2 to 3 weeks, 2 to 3 months, 2 to 3 years. The investor is trying to use capital to deploy that capital and try to ride where those trends are hot. Now, we're wondering, could that trend continue? Now, the other thing we kind of have to say here is the semiconductors in the last, let's say, 1 week was strong as well. Okay, that bumped up. So if someone said, I don't understand the difference in the colors of the colors here, we're going to right click on this. We're going to go to customize just real quick. And if we do, right click on that, go to edit formula. If you had questions on what is the color differences, please read what is actually when you right click on the top heading, okay, go to edit formula. It will give you really a synopsis of what the numbers / colors mean in the boxes. And I don't need to go over that because you can read that too, right? But that's what it really is. And if you scroll down, you're going to notice you can even see what it's gauged off, what it's compared to, okay? Now, if we also take a look at something else that I think is noteworthy to kind of read, there's lots of tall hold or call holds. And you know what those are, okay? Lots of those, lots of green in those boxes, okay? Now, that does not guarantee that they're going to go up tomorrow, today, this afternoon, next week. They're just showing, hey, it's a little potential little bounce setup, okay? Now, the other thing we got to also say is the 10 hold. These are the moving average colors. If I pulled up the chart and if I pulled up the Russell, you're going to see in the last 2 days, or 2 days ago, I should say, the moving average color went green. And that went green 2 days ago. This went green 3 days ago. This went green 1 day ago. This went green 2 days ago. This went green 1 day ago, 2 days ago, 2 days ago. So what do we actually see here? There's a lot of things that happened in the last 2 trading days. Now, I want to kind of go to the comment just real quick, and this will be a perfect place to address this. So what happened is the market moved to the upside, right? And then sometimes the market kind of goes zigzags, right? And we start to get in, this is trend 3. And when we start to get into consolidation, this is trend 4, okay? Now, I need you to be honest with me, okay? How many of you, when that stock starts going sideways, you just start saying, James, I want to sell everything, and I'm going to wait and see what's going to happen? How many of you besides me have done that, okay? Now, does trend 4 mean bearish? Is that what that means? Please help me here. Does trend 4 mean bearish? It doesn't mean bearish. It just means you have a defined level of resistance forming, okay? Trend 4 could really also be that newer support levels could be establishing, okay, ... If we saw, for example, like trend 4, some investors might say, James, I'm just going to adjust the stops. And we've hit that a lot. We've talked about stop adjustments, okay? So first off, trend 4 does not mean bearish. Why do you say it like that? Well, because a lot of times, if you're like most people, you see trend 4 is starting to get a level of resistance, and you think, man, I'm just going to sell everything. The problem is when you sell everything, you have to reestablish a portfolio. Be very careful, very careful. that if you were going to take a whole portfolio and do swing trading on the whole portfolio, this is why good investors do trend trading and then maybe sprinkle some swing trading on top of that. Because if you get out of your short-term trades, you fall into what I just talked about, that pit of saying, I was doing so well until I sold on a consolidation, only to see the market bounce back up, which then exposes that investor to say, I was swing trading my whole portfolio. Is that a good idea? Maybe it's not. Now, the big thing is we talk about stop adjustments. We talked about, for example, covered calls. We also talk about, for example, things like collars. I'll address that in just a moment. But if you take a look at this, is if we have something where, hey, over the last couple of days or a week ago, we saw some consolidation, we did some covered calls, we did some collars, then we actually say, well, if it, let's say, breaks back to the upside, is that the end of the world? Now, wait, hold on for a second, okay? If we actually did stop adjustment and they got stomped out, the investor traded their plan. That's what now, you got to remember something, what I've seen, okay, it doesn't mean that everyone's seen this, is if you get stomped out of a position, probably within, let's say, a week, what I've seen in example and back testing, feel free to back test your own numbers, you'd probably say if that trend was pretty strong, in about a 4 to 10 day window after being stomped out, there could be re-entry signals. This is why if you get stomped out, it doesn't mean the trend is over. The investor might want to put that on a watch list and say, these are trades that recently stopped out, and I'm going to look for a potential re-entry. Do people typically do that? No, because they jump to other things, because we lack focus. The biggest actually thing is when you get stopped out, make a watch list, say these were recently stopped out, because if it was trending, it could still be trending. Just because you short-term pull back does not mean that trend's over. Lesson learned. Let's move forward. Now, if we had things like covered calls or collars, and it breaks to the upside, are covered calls and collars still bullish? Well, they are. And if the market broke to the upside, is it like the investor is like making nothing or having higher unrealized gains? Well, they are having higher unrealized gains. They're just not making as much because in the short term, it's capped. Okay. Now, I want you to imagine you went to an architect and you said, you've been in the business of being an architect for 20 years. And you ask them, can I see some of the blueprints that you've done over 20 years? Because me and my spouse are thinking about building a house. The architect says to you, I don't have any blueprints. That would just be like, what? 20 years? 10 years in the business and you don't even have a blueprint? I'm going to tell you right now, in the investing world, there are a lot of people who don't have blueprints either. Now, what the investor might do is they might just pull up, let's say, their sample plans. Now, the goal of the investor is not just to learn 42 different strategies. Their goal is to say, of those 42 different strategies, or how many have they learned, they take some that they want to trade. And then what they actually do is say, I'm going to write a really plan to that. Now, I just want to speak to this caller, and I'm just going to go back to the caller plan. I mean, why not go back to exactly kind of what the plan we talked about in the sample plan? Now, these are samples, okay? And so the biggest thing is when we talk about a caller, we're just going to kind of read what might be, and this is the question. When we have a trend 3 and it goes to the upside, some investors, they get out on trend 4. We just hit that. What happens if all of a sudden it goes trend 5? Well, trend 5 means the price goes down below the 10-period moving average and the investor has a greater chance of being stopped out. That's true. But the question really comes, which I want to get to now, which is, wonder if I had a cover call or a collar. The management is pretty much the same. Now, let me kind of walk through, and I'm just going to kind of read a little bit. When we talk about this type of strategy, what might the investor be considering? And the investor might really be considering, so we talk about 2 situations. There's really 4 potential ways this trade could go down. And the first one is, the first and second is on if the stock goes to the upside. And this is the question, James, hey, the stock was going to the upside or had some stocks going up to the upside. I might have got tipped out on some of my stocks. We hit that. We talked about that. but wonder if I had some cover calls and collars and they broke to the upside. Let me just kind of read a little bit. So situation number one, bullish. Okay, now I challenge you, don't keep it in your mind, write it down. So stock pulls back, then breaks up through resistance. Kind of sounds like what we saw in the last week. Diagonal or horizontal resistance, it doesn't matter. After 9 or 10 trading days. That's key, okay? While sitting in protection, meaning that sold call and long put, define the resistance and set a buyback for the short call 1 to 2% above resistance. Okay, the long put would typically be worth less than 50 cents. The investor could use that as a stop or as a defined risk until expiration. So here's what happens. All of a sudden, it goes trend 4 and 5, and then it snaps to the upside. Where might be the drop? Where did they maybe miss it? Well, they put on a cover call and collar, but then they forgot to set the buyback for the call. That's really what happened, right? Things shot to the upside, which, is that horrible? No, it's not horrible. It's way worse, okay? But they forgot. They got in the cover call, the collar. They forgot to set the buyback on the cover call, the collar. Okay, I would say that most people probably that situation number one. That's not what we're talking about. Situation number two is like number one. Situation number two is the market goes bullish. You protected your stock, whether it's maybe a married put, collar, the stock prior to 9 or 10 days. Boy, this sounds like recently. After applying the protection, breaks to the upside. Sounds like this last week. The long put is typically worthless as the price goes to the upside. And so consider if the price were to break to the upside prior to 9 trading days of putting on the cover call or collar, some investors consider selling a new put or cash secured put. This could offset some of the long put loss. Your position then is really a covered call. Some investors might play the probabilities of the sold call. Why is the investor doing a cash secured put on top of that collar? They're trying to increase the delta. Why are they trying to increase the delta? Well, they're trying to actually have a higher sensitivity to upside direction. Those positions are still capped and they are still bullish, both of those. Now, after doing hundreds of these for yourself, you might find that these situations, they play themselves over and over and over again. Okay, so you want to think about if that's you and say, hey, I saw some stocks going to the upside, they consolidated, and did I follow the plan? Did I actually put those stops positions in a watch list? Did I do that, or did I drop the bag there? If you drop the bag, you know what you need to focus on. Second, if you did a covered call or a collar and it broke to the upside within 9 or 10 trading days, you saw the move to the upside, did the investor consider a cash secured put, maybe even a vertical perhaps, if they would consider that for themselves, if they did options, okay? Now, if all of a sudden the investor said, I'm not going to do that, okay, could the investor still benefit? Yeah, they could, but it's just a max gain strategy, okay? So again, why do some investors put on a cash secured put? They put on a cash secured put because they're trying to increase the delta, okay? Higher delta, greater potential gain or loss if the stock goes up or down. All right, try to answer those questions. Now, the comment right here just kind of goes back to the labeling on the T-hold, the toe-hold, which is trade above the high of the low day. That's intraday price action. And hold, we're talking about close above the high of the low day. Okay. Now, the comment, just real quick before we get into these trade examples, is where can I actually find, that? Well, right on here. Okay. So the question was, where did that come? Wow, 1, 2, 3, 4 me says. If we look at that, where could you find that? We are looking for that right there. And when I say there, it's going to be right there, okay? You cannot copy and paste that. You can type that in on your platform, okay? And it is case sensitive. All right. Now, let's kind of go back to this. I want to just say something briefly on, really the sectors here real quick. When we take a look at these sectors, one thing that I kind of think that was interesting is when I pull this up, and we're going to do the same, and we're going to spend the rest of the time talking about trade examples, but I want to look at the week performance for just a moment And I want to kind of get an understanding of these indicators. So the one that's, okay, now we're fully loaded. Now, if I take a look at this and say, which one has gone up the most, it's energy. Now, it wouldn't take a rocket scientist to say, wow, crude oil was kind of going up over the last couple of days, okay? And what you're now going to notice is all of a sudden that relative strength in the last 2 weeks, 5 days, 1 week, 10 days, 2 weeks, there's been a little push in energy. That's not horrible. I mean, that was one of the sectors that was lagging a little bit, okay? Now, what you're now going to notice is when you look at that tall hold, call hold column, there's a lot of ones in green. And the green is just telling us it does meet the criteria for a setup, okay? And the 0 with the black background means it does not meet the criteria. Now, you got to remember when we talk about scripts, they're not guaranteed for accuracy of timing. This is why it's critical that as an investor, you yourself, don't lean on anyone else, okay? You yourself can be empowered to have an understanding of what it's trying to actually do, and you verify, okay? Now, the biggest thing is what we see right here is when we look at, let's say, discretionaries, that was up 1.91%. This is the only sector, at least today, that is at a 20-day high, DH, or a 55-day high, okay? Now, remember, if you're getting actually discretionaries to hit brand new highs, probably not in recession, okay? Now, if you take a look at this, what you're going to now notice is same thing we saw in the indexes. 3 days ago, the moving average went green. 1 day ago, 2, 2, 2, 2. Okay, 1, 1, 1. Lots of fresh bread. Smell that? Now, does that guarantee it's going to go up after this? No, it's just a setup. Okay? Now, the other thing we're going to kind of notice is we're kind of getting some crossovers. We're getting a crossover here. We're getting a crossover here. Now, by the way, if you click on that MAX, you can designate what type of moving averages you want. You want simple, you want whole, you want weighted, you want exponential. What type of moving averages do you want? And then also, what's the duration of time? So I have it pre-built how I like to actually see it for this paper money account, but you could customize it to your liking. Have at it. And the other thing we're going to notice really about the breakout that I just want to point out right here, okay, so let's kind of bring this to kind of which sectors. You'd have to say a little energy, getting a little push, whether the investor likes it or not. Discretionaries are there. Base materials, we're also seeing actually a push on financials, and you're also going to notice those transports, ding, 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 getting a little push to the upside, which we're going to talk about, okay? Now, one thing I want to kind of point out here is on this breakout script, if you click on this, right click, go to edit formula. When you pull this up, okay, right click on the column, edit formula. It says the breakout script was meant to find stocks breaking above the resistance point, okay, or below the support point in the last how many days? 3. Breakout indicates the number of days above support. Testing, if there was testing, like there, or continuation, testing indicates price is retesting support or resistance, okay? I got to say that. My friend's going to Paris, okay, coming up. Just talked to him yesterday. I was like, you're the luckiest dude ever. Now, continuation indicates the breakout is continuing after a test. Now, there's a couple there. Continuation. Testing. Now, why does someone like testing? Well, they're saying, hey, look, maybe I missed the breakout, but that testing could be that bounce setup, also known as call hold or toe hold, or CHE, close higher gap. All the above, okay? Now, if it's just a continuation, the dadgum thing so far just kind of keeps floating to the upside, driving those bears crazy, okay? I mean, he's pulled their hair out saying, I can't believe it keeps going up, at least right now. Now, what I'm going to do is, now the comment came in, what do you think about CVX? Now, I'm going to push back on that. Now, Dean, Frank actually asked that, okay? What do you think I think about CVX? Okay, if we're talking about energy, the two main stocks in energy are Exxon and Chevron. If we've been paying attention, I know Frank has been paying attention, for sure. Because Frank actually makes a lot of comments, and we appreciate that. So, of course, if someone said, my gosh, little energy is getting a push, what do you think about little Chevron? It's also pretty much a short-term higher high. And if we zoom in on this chart, look, the moving averages, okay, they're green and getting a little pinch. Now, many investors, they like to really kind of see the moving averages green and also maybe giving a crossover. Now, Friday, we actually saw a monster candle hitting a shorter term intraday high. Today, just giving back a little bit. Now, a lot of people like that little give back a little bit because they might be saying, geez, I'd like to try to get in after that big candle. We know together that that midsection really becomes a potential support. Remember, 2 weeks ago, we hammered home red candles above moving averages are not bearish. Why do you say it so loud? Because I wish someone would have literally knocked that into my brain 20 years ago. A lot of times, brand new investors, and I was brand new at one point too, I look at the color of the candle and that would determine what I feel like. And then I traded what I felt like. It doesn't really turn out that great, okay? At least for many investors. Be careful of that. So Chevron, what's our thoughts on Chevron? Bullish, okay? Now, I'll just say some of these other ones. Valero, VLO, APA, MPC, Oxy. Those are also ones that are still bullish as well, okay? Now, I want to actually kind of talk about some examples here using the indicators. Now, James, when you teach, you kind of teach intermediate to advanced. That's true, okay? I believe people can have a grown-up discussion. If I was going to take a tennis lesson, I wouldn't want a tennis lesson from a beginner coach. I would say, look, give me Roger Federer, okay? I don't care if he would whip me all over the court. I want the best coach possible, and I hope they actually make me kind of struggle a little bit, because I think potentially, as I go, it's going to give me kind of a more real sense of what might really happen versus just a coach hitting the balls down the middle. In a real game, that doesn't really happen. So I might feel good when I'm practicing with someone who's just kind of giving me some easy shots, but in the real world, that's not what happens. I want to go to just real quick a couple stocks. Now, when we talk about a couple examples, I'm going to go back to Nike. Now, we talked about this. Now, if you don't mind, I'm going to fast fire a little bit, okay? This is going to be a big boy, big girl discussion. I kind of like that, okay? We can absorb, okay? Our minds are fast computers, okay? And we can absorb a lot of things, especially if you say, look, this is not my first rodeo. I've seen trends before. Let's show some examples. 4 or 5 trades in 15 minutes. Buckle up, okay? Now, this is kind of one, if you take a look at this, we might say there's maybe a shoulder, a prolonged one, okay? There's maybe a head. Southerners might call it a melon. And what you're going to see is another shoulder, okay? Now, if you take a look at this, some investors might be saying, hey, that's a little shorter term in the higher high, in the short-term sense, higher than that, just maybe by a little bit. And then anything above this, we kind of have this area of resistance and then kind of maybe some upward, maybe a previous high. The idea is that maybe if it kind of breaks inside this old channel, like we talked about with UAL and Delta, we're going to come to those in just a sec. We're going to include Alaska. Well, could this maybe go to the upside? Let's start with a stock position first. Why does that always have to be options? Well, what we're going to do on this trade example, and we're gonna kind of knock this down fast, okay? When you take a look at this example of Nike, we're gonna right-click on the chart, okay? Right-click on the chart. We're gonna go buy custom. We're gonna go with OCO bracket. Now, I'm not gonna sit here and kind of talk about position sizing. I'm gonna go back to the position sizing we always talk about. 6,500. Give me an amount of shares. It's gonna be capital 6,500. There it is. 81 shares. And we don't need to kind of keep going back to that because we talk about that every class. 81 shares. We're going to actually put the target right up there. Where's there? Well, here is there, okay? And we're going to put about 87.50. What is it? 87? No, 89.50. And now what I'm going to do is go dated GTC. When I look at the stop underneath, I'm going to kind of go back to Where's the old resistance, new potential support? 78.15. Where we actually have the moving averages, if we try to give a little bit more breathing room, 77 and 40, 77.40. If the investor said, look, I want to kind of give it a little bit more breathing room, those both seem really tight. I would concur with that. They do seem tight. And if we kind of tried to set it underneath maybe this prior higher low area for a higher low slash support area, $76 less 2%, it's going to give us a stop at 74.48. So if I go and type this in 74.48, stop day GTC, trade number one is here, trading a stock position, okay, on Nike, seeing if we can't get a little push to the upside. Why did you hit this first? Well, because when we went back to the sectors, discretionaries was one of those sectors that was not just like pointing something out, no rhyme, no reason, no follow through. When you take a look at, let's say, discretionary, the IXY, that was the lone sector that was hitting the 20, the 55-day high. We want to know what are the indicators, how to read them, how to use them. So when we say how to use them, what does that really mean? Is there a trade idea behind what we now can read and understand? Our first example is Nike, confirm send. Now what you're going to see is trade number one. We're going to put it in the IRA. Now also remember with the stop, okay, the stop is a trigger to sell. It doesn't specify that it's going to sell at exactly where we put in the price, okay? So we got to understand that's the risk with the stop, okay? Send the order. If that's okay, there it is. Silas says, James, well, Silas, I'm not even going to say that, okay? Now this, Silas, I want to kind of say back to you, I have to put up with myself, and it's very tough, okay? Now, the second trade I want to talk about is Tesla. Now, what you're now going to notice in Tesla, okay, Tesla's kind of had some consolidation. I'm not sure if I could really say it was bearish if we're talking about in the last, let's say, 1 to 2 months. We could say short-term bearish, but kind of if we talk about weeks to months, it's kind of been more neutral. If we want to see that quick verification, go back 3-year weekly. And what you're now going to notice is it just kind of looks, when we look at the weekly chart, it kind of looks like it's been more sideways. Now, why do I pull this up? Well, kind of what's interesting is when the MACD cannot really get below the zero line, the price is holding momentum. What's your favorite word? Momentum, okay? Now, when we look at this chart, what you're now going to notice is last week, now I need help here, okay? I'm not a candlestick identifier to the degree Ben is. If I looked at that candle, can anyone help me? What type of candle is that I'm pointing to with the arrow? Now, also what you're going to notice is what's the candle that we're getting at so far? Now, some investors might say that's not a spinning top, that's not a doji, that is not a bearish engulfing, that is not a dark cloud cover, and I think we have a winner, PJ, hammer time. Okay, now here's the big deal. Hammer time, what is it doing? Well, it's trying to really make a higher low. The intraday lows really show where it sold off to, and then it bounced back up, leaving a lower shadow. And the price closing up near the high. And if we start closing up near the highs and we make an intraday high, and maybe the last 2 weeks a high, that is probably not bearish. Now, wait, stop. Does that guarantee? We're talking about the stock market. You don't guarantee anything, okay? We don't know what's going to happen this afternoon in an hour. We don't know what's happening in 2 weeks, okay? So that's why the investor actually, number one, position sizes, and they also set a stop to try to have risk management. So let's just get that. We know that, but we have to understand this is a business of risk. This is no different than going to the bank, loaning clients money, and thinking everyone's going to pay us back. Or a car dealership that everyone's going to pay us back. Some people, they're going to default. And the business is going to lose money, the bank is going to lose money, and it's the same thing in the stock market. So I think I hope with those examples you say, okay, I get hung up on risk a lot, and we're not diminishing it, but we just need to realize that risk is there always. Now, the biggest thing what we're going to do is on Tesla, trade it here is we're going to look at this candle. That was a pretty big candle there. Not across yet, but that is a shorter term follow through with the moving averages starting to pinch. That is almost, barely, a higher high relative to this one. Now the question now becomes is, could we actually go back up to 365? Trade example. We're going to go to the trade tab. Now, by the way, could you actually say in this case that Tesla is discretionary? Yeah, you could say that. Tesla could be discretionary. You don't have to have a Tesla. You can just drive a regular old car. And if you take a look at this, we're going to go back to, let's say, the strikes, 14 strikes. We're going to go look at the put side just real quick. And if we said, look, I'm going to try to sell in this case a 335 put with a delta of 35. So that delta is showing if as the stock, think of it like a conversion. The stock goes up $1 approximately, or stock goes up or down $1, how much does the option move by given that strike and delta? 35 cents approximately. Now, the other thing, what you're going to notice is we're going to open the strikes up and we're going to go to the 335, 330. Now, I'm going to right click on the 335. We're going to go we're going to buy the 330. Why? Why does the investor buy in the 330? Well, that's downside protection. Okay. So the trade is really a bullish trade, thinking that the price could stay above 335, which might also correspond with support. Now, if they are wrong, think of the short put as the obligation to buy, and the 330, the bought put, is the right to sell. So let's think this through. Obligation to buy at 335, buy at 335, sell at 330. Well, if you buy at 335 and you sell at 330, then you have a risk of $5. But the risk is offset because the investor is getting a credit of $1.80. So risk $5, less $1.80, you get a max loss there given the vertical of $320. Now, why do some people trade the verticals? Well, you might be looking at some of these bigger dollar stocks and saying, well, how do I actually maybe trade some of those if stocks? This is why some people consider using verticals. Bad part about verticals, there's a max gain. The good part about verticals is there's a max loss built in, okay? Notice the commission there. Now, what we're going to do is we're going to push this to 2 contracts. Now, we're in the IRA account. If we did 2 contracts, it's going to be $640, which is not more than what the paper money can risk or is willing to risk. Now, Journey 777 says 400 watching. Should be 4,000 watching. If I had $1 for every time actually someone said to me, man, where do I find this? I didn't know that stuff was there. Probably just, it's just amazing, okay? We're going to get to it. Now, the biggest actually thing is we're going to send that order. Now you might also kind of say, well, James, I'm kind of noticing you kind of got another position here and you got another position here. That's true. These positions were the old short put positions that are currently still on. But think of this as we're just kind of rolling up or pushing up to a new put spread. Now, some of you are like, James, I saw that before you pointed out. That's good. That means you're making progress, okay? So it actually has 2 put spreads on there, okay? Now, another one I want to kind of go back to just real quick. Last week, we talked about the UAL. We talked about the DAL, the United Airlines, Delta Airlines, and we talked about those transports. Now, what I want to kind of just point out, just briefly on this, okay? We talked about stocks that were breaking inside old channels, okay? Now, you're going to see that kind of, and this kind of goes back to the question that was asked is, hey, the stock was in trend 3. And if the investor says, James, I can't see trend 3 to save my life, don't worry. We actually made a chart that actually helps you see what type of trend it's in. The color of the candles, if we go back to this, and I'll send you this link and I'll post it in the description as well. When we see the green colored candles, that is what we call trend 3. Trend 3 is when the price is above both moving averages. We don't have an area of resistance. When we get the orange ones, we go trend 4. Purple, trend 5. And you're going to see down at the bottom, we could also see that on the oscillator as well, telling us 1, 2, 3, 4, 5. So it's telling us how long was the stock in trend 3? How long was the stock in trend 3, and so on. Now, I want to also kind of point something out here also. If you're in a situation where it was trend 3 and then goes 4 and 5 for just a short period of time, what does that tell us about trend? Well, it tells us that there's really bull flags. Now remember, you can see that flag when you get the orange colored candles. You could be on day one of your learning and know that. And if we actually get, let's say, orange or purple colored candles and it's a little bit longer, but we're not really pulling back that much from the high, we barely ever got a red candle, that also means it was a pretty short and shallow pullback. And then if you see, well, James, we've gone down to orange, purple colored candles, that's a flag, okay? That is your consolidation pullback. We said this 2 weeks ago, last week. If we only get orange colored candles, trend 4, just kind of consolidating. If we get an orange color candle and a purple color candle, a little deeper pullback. Not massive, okay, so far. And if we start getting red colored candles, boo, this is when those sellers, ding, they're knocking that price down. And if the investor said, look, I'm in that stock, and it went to red colored candles, the chances of getting stomped out becomes higher when those colored candles are red, okay? Because that just means the price is down below both moving averages. Now, the biggest actually thing is here, I want us to continue to keep an eye on UAL. This looks like after a short, shallow pullback, we're getting also a little bounce. We see a little green hold dot on that chart. We're on the daily chart. Now, that's just not in UAL by itself. That is also in DAL. Both of those positions are still on. And you're going to notice that hold dot also on the chart as well. Now, where I want to turn, trade number 3 here is Alaska. Now, a lot of you from the Northwest are saying, James, you focus on the people from Chicago and the Delta and so on and so on. You never talk about Alaska, okay? Now, what I want you to kind of notice is here, notice when the color of the candles went red. Sometimes, man, it could be ugly. Just like just like when it goes to the upside, it could be unbelievable, like green, 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 green. But then sometimes it's just like, my gosh, just let the stock bounce for a day. But sometimes that selling pressure can be so fierce, it's just like mercy, okay? Now, when does it stop going down? You got to get people to stop selling. You got to get buyers willing to come in and step in to buy. You zoom in on this, what you're now going to notice on this chart is, well, you kind of have some support levels. Now, the funny thing is about if someone said to me, James, I can't see support to save my life, I would tell the person, well, use the green dots, okay? And what I want us to do is we're just going to circle these green dots, and our goal now is if we had a ruler in hand, let's just kind of imagine we took a ruler and say, can we draw a line, whether it's horizontal or diagonal, and go right through as many of those green dots as possible? Now, we could probably teach a 7 or 8-year-old how to do that, and we would just say that support line becomes what investors call support and or potential trust. That's where the stock has gone down to historically and then bounced back to the upside. Now, what you're now going to notice in the last couple of days, we fell down to the 30-period moving average and started to get a little bounce. Trade number 3, we're going to do it here in this case. Now, by the way, is that bad? Does the stock have to come down to old support? The answer is no, especially if we're talking about a bullish trade. Now, what I'm going to do is I'm going to come back to this. I'm going to go back to Alaska, okay? And if we type in, let's say, look, James, I want to kind of do something a little bit more bullish. I want to try to buy a call. Now, that call there's unlimited upside. There's also a defined risk to the downside. And now the good side about the call is the delta could get bigger and bigger as the chances of being in the money at expiration. If it were to go higher, it could get higher. It could make a bigger percentage gain given a $1 move to the upside. The good side is the stock actually goes to the downside. The long call could risk the premium, okay? The other part about that is that the stock actually goes down, the delta actually shrinks, and that loss becomes less and less and less if the stock drops. So there's cap gain, cap loss. Some investors like that. Now, what we're going to show in this example is we're going to buy a call. Now, wait, if you buy a call, what do you think the stock is going to do? Well, you think it's going to go up, okay? Think about like buying a call is you have a right to buy the shares at 57.5. Why would you do that if you didn't think it was going to go up, okay? Now, what we're going to do in this case is we're going to put it to the mid price of $3.95, and we're going to risk all of it, okay? Now, the investor wouldn't do that unless they were saying, I could risk, or they were willing to risk $3.95. Now, the investor might say, James, could I also put a target on this? Well, sure they could. Could they say, James, if we go to 63, if we go to, let's say, 67 or 65, could I set the targets there? Sure. Now, what I'm going to do for time's sake is I'm going to go confirm and send, and this is just buying a call, okay? The other bad side about a call is it has a limited amount of time. So if this is going to move, it needs to move fast, okay, to also offset that time decay. Third trade, we're going to send that. Now, I want to kind of show just quickly a couple other stocks, 30 seconds, that actually the investor might keep an eye on. We also saw, in this case, some of the casinos getting a little push here. If you look at casinos, brand new high in casinos. What sector is this? Consumer discretionary, okay? When you look at Las Vegas Sands, same thing. You're seeing a little push to the upside. Could this be a little continuation? Many investors might think so. If we look at WFC in closing here, keep an eye on also the financials. WFC might be one that's kind of maybe at an area of resistance and might try to go up through the top of the channel. Keep an eye on those stocks. These are not recommendations, they're examples, okay? And so something we're going to be talking about in the next couple of days, see if they can continue to get a move. Now, remember, Cameron May is coming up next. Our goal here today was to talk about indicators, how to understand the indicators and read it, and also how to apply in a paper money format. We did 3 trades in 15 minutes, and also talk about some stocks that the investor might keep an eye on. So stay tuned for the next class on covered calls and cash secured puts. This has been an example of these have been examples done in a paper money format. Reminder of that. Remember that all investing involves risk, and thanks so much for attending today's session, and Ben as well. And with that said, this has been the class on trading with technical indicators. I wish you a great day, and I'll see you back tomorrow as well on Investing Master Series. Take care. Bye-bye.